Disclaimer: the information in this video is for educational and entertainment purposes only and should not be considered financial advice. I am not a licensed financial advisor. Any stocks, companies, or investment ideas discussed are my personal opinions only. Investing involves risk, including the possible loss of principal. Always do your own research and consider speaking with a qualified financial professional before making any investment decisions. Welcome to my first monthly investing report. I am excited to have you with me. Today, I want to talk about 4 stocks I like in the artificial intelligence space: NVIDIA, Lumentum, Oracle, and Micron. This is not financial advice, but these are companies I'm watching closely because they sit in different parts of the AI value chain. NVIDIA is the leader in AI chips and data center systems. Micron supplies the high-performance memory that AI servers need. Lumentum provides optical and laser technology that helps move data faster inside AI data centers. And Oracle is becoming a major AI cloud infrastructure player. The big theme behind all 4 is simple. AI is moving from hype to real workplace use. Companies are using AI for customer service, finance, coding, analytics, document review, marketing, forecasting, and automation. As AI tools become part of everyday work, the demand for computing power, memory, networking, and cloud infrastructure continues to rise. That is why I like looking at these stocks through 3 lenses: revenue growth, CAGR, and PEG ratio. CAGR stands for compound annual growth rate. It tells us how fast a company, industry, or stock is growing over time. For AI stocks, I want to see strong growth that is not just one good quarter, but part of a bigger trend. The second metric is the PEG ratio, which compares a stock's price to earnings ratio to its expected earnings growth. A high P/E ratio can look expensive, but if the company is growing extremely fast, the PEG ratio can make the valuation look more reasonable. A PEG near or below 1 is often viewed as attractive, although it depends on the industry and the quality of the company. Let's start with NVIDIA. NVIDIA remains the king of AI infrastructure. Its GPUs are the backbone of modern AI training and inference. The company has become far more than a gaming chip business. Its data center segment is now the main driver, and recent results showed massive AI-driven growth. NVIDIA reported very strong revenue growth, with data center revenue continuing to expand rapidly because companies, governments, and cloud providers are building what Jensen Huang calls AI factories. The reason I like NVIDIA is that it still has a huge runway. AI models keep getting larger. Enterprises are only beginning to integrate AI into normal operations. And every new wave of AI adoption requires more chips, networking, software, and systems. NVIDIA is not cheap, but its growth has been so strong that its PEG ratio can still look reasonable compared with many slower-growing technology companies. Current market data shows NVIDIA trading around a P/E in the low 30s, with a market cap above $5 trillion. Next is Micron. Micron is one of my favorite AI-related stocks because AI does not just need processors, it needs memory, especially high-bandwidth memory. AI servers need enormous amounts of fast memory to feed data into GPUs. Micron has benefited from this shift, and reports have highlighted how NVIDIA's demand helped push Micron deeper into the AI memory boom. What I like about Micron is that it may still trade at a more attractive valuation than some of the more obvious AI winners. Memory companies are cyclical, so there is risk, but if AI structurally increases demand for high-end memory, Micron could have a stronger earnings cycle than investors have historically expected. Current market data shows Micron with a P/E in the mid-40s, but forward expectations and page-style valuation measures can look more attractive depending on the earnings growth assumptions used. Third is Lumentum. Lumentum is a more specialized AI infrastructure play. It is not as widely known as NVIDIA or Oracle, but it is important because AI data centers need optical components, lasers, and networking technology to move massive amounts of data. As AI workloads grow, data centers need faster communication between chips, servers, and facilities. Lumentum recently reported very strong results, with third quarter fiscal 2026 revenue growing 90% year over year to a record $808 million. That is the kind of growth that makes investors pay attention. The opportunity is exciting, but I would also treat Lumentum as higher risk. Its current P/E is much higher than NVIDIA's or Oracle's based on current market data. So investors are already pricing in major growth. That means the company needs to keep delivering. If AI optical demand keeps accelerating, Lumentum could continue to benefit. Fourth is Oracle. Oracle is interesting because it is not just a legacy software company anymore. It is becoming a serious AI cloud infrastructure company. Oracle Cloud Infrastructure is benefiting from companies needing more AI compute, and Oracle has also reported huge growth in remaining performance obligations, which suggests strong future demand already contracted or committed. Oracle reported fiscal 2026 first quarter cloud revenue growth of 28% and total remaining performance obligations up 359% year over year. Oracle may not have the same explosive brand appeal as NVIDIA, but it has something very valuable: enterprise customers. Large companies already use Oracle databases, enterprise software, and cloud services. As AI moves into the workplace, Oracle can sell AI infrastructure and AI-enabled tools to customers that already trust its ecosystem. Now, let's talk about the broader market setup. In my view, these AI stocks looked oversold last week, especially after the sharp pullback in AI-related names. But the rebound we saw afterwards suggests investors may have overreacted. Micron, for example, bounced strongly, and NVIDIA also recovered as technology and semiconductor stocks regain momentum. That tells me the market is still willing to buy the AI trade when fear gets too extreme. There are also high-profile investors like Michael Burry warning that AI demand could be temporary and that NVIDIA and the broader AI trade may be vulnerable. He has made some serious points about debt, data center spending, and whether current AI demand can last. But my view is different. I think some of that fear is overdone. The reason is simple. The AI build-out is not near the end. It is still in the initial phase. Companies are only beginning to integrate AI into the workplace. We are still early in seeing AI used across accounting, finance, customer service, coding, marketing, legal work, education, healthcare, and business analytics. That means the demand for chips, memory, optical networking, and cloud infrastructure could continue for years. That is why I still like NVIDIA, Micron, Lumentum, and Oracle. NVIDIA is the AI chip leader. Micron benefits from high bandwidth memory demand. Lumentum benefits from optical networking inside AI data centers. Oracle benefits as more companies move AI workloads into the cloud. Politically, President Trump is not personally on the 2026 midterm ballot, but his administration and party have a strong incentive to keep the economy and markets strong heading into the midterms. In my opinion, that supports the case for a continued bull market, especially if inflation stays under control, corporate earnings remain strong, and AI spending continues. On the geopolitical side, the Iran conflict is a risk, but I do not believe further major escalation is the most likely short-term outcome. Recent market reactions suggest investors are already looking past some of that fear, especially as reports pointed to de-escalation signals. So my overall view is this: the market may be volatile, and there will always be people trying to scare investors out of strong trends. But I believe the AI infrastructure build-out still has a long runway. For patient investors, I think these four stocks remain some of the most important names to watch in the next phase of the AI bull market. Thanks for watching, and please subscribe to my YouTube video channel where I post videos that help you learn more about the world of business. Until next time, Dr. B wishing you success.